And real estate is really the backbone as collateral of the global financial system. That's a problem because it's not a good form of collateral. And I think that Bitcoin works much better as a form of collateral. And that's why I like the dual collateralization of Bitcoin and real estate, and that Bitcoin slowly fulfills the role that real estate did, which is really a role of money being this pristine form of collateral, that if you own Bitcoin, you don't want to sell it because it's increasing its purchasing power faster than real estate because Bitcoin is much scarcer. So real estate as a store of value has lost its purpose since Bitcoin was introduced to the world. Once this mindset settles in, what I expect is that, I'm talking like 50 to 100 years out into the future, people won't use real estate by default to store value. They will use Bitcoin by default to store value. And the mindset of houses always go up in value, it's a great investment, might change to houses are a potential liability, and Bitcoin always goes up in value. Obviously, everything that's happening is good for Bitcoin because the game theory that's going to play out, like people now understood, Bitcoin means winning.
Hello, everybody, and welcome to My Two Sats. My name is CJK, and today I'm joined by Liam Wankum. We're going to be talking about money, currency, credit, real estate. Couldn't be more excited for this call. Liam, thank you so much for joining me.
Thanks for having me. I'm also really excited to chat with you.
Well, you may or may not know, but on this show, we like to start out with our guests sharing their orange pill moment. So I'd love for you to tell the audience, what was that orange pill moment for you and how did it all go down?
Sure. I was studying philosophy and ethics over a decade ago, and I came from uni. I just finished a lecture, and I went down like a regular did to a friend's apartment, and his roommate was sitting in front of his computer, and he was using a website of an individual who just got freed, which I was very happy about. And I saw how he transacted on the website and how he paid for the goods he ordered. And that just, boom, like that moment, I think about it often actually. And that moment is still very vivid in my memory because I was standing right behind him and I was watching how he paid for those goods online. I was like, wow, finally, there's the internet currency that we were missing.
Wow, that's amazing. And guys, if you don't follow Leon already, go over onto X and follow him right now because he is grossly underfollowed for the value and the content that he puts out on a regular and consistent basis. So, Leon, wow, over a decade ago that you've been kind of seeing this work and watching it develop. I always like to say we've watched it turn from magic internet money into digital gold, into the reserve asset of the internet economy, and now finally through this adoption and monetization phase, the most pristine form of collateral in the world. But before I get too far ahead of myself, I want to ask you, when you look at money versus currency, do you create a difference there? How would you define those two differences? And then what does it mean for the person who's utilizing money and currency in their everyday life?
Mm-hmm. So currency are defined as a predefined system of money. For example, the best example is fiat currency. It's a money issued by the government, so it's a currency within a system. Whereas money overall doesn't necessarily need to be issued top down. So there doesn't need to be a network, a central bank, or an individual corporation that issues it. It's something that in the free market is being used to transact, store value, and use it as a unit of account. So fiat currency, I think, is the best definition of a currency because you are forced or you are made to use it by law, right? Because it's legal tender, we pay our taxes in fiat currency. And then Bitcoin is a beautiful example of money because it's a good that came into existence through the free market, and people use it for no other purpose than it being money. And not because they're forced to, but because it's one of the best options to transact, and it's definitely the best option to store value. And it will also turn into the best form of currency because think about it in that way where the Bitcoin network is a network and it has its own currency, which is Bitcoin, because Bitcoin is introduced into the world through the proof of work algorithm and the Bitcoin network. So Bitcoin is a currency as well within the Bitcoin network. And it's near perfect money.
It really is amazing that we are alive during the time where I like to say it's like the first discovery maybe of real perfect money.
Yeah.
Because when we look back through human history and we kind of see how people have stored value and what that meant for medium of exchange and unit of account, what do you see happening now with Bitcoin coming on the scene and kind of jockeying into that leadership position? Where did we come from and where are we going?
Yeah, I think like money always changed, right? Like there's an evolution in money. And when you look at money and you look into the history of money, I mean, Lynn Alden has wrote a tremendous book about it, which I can just, which I think that everybody that is interested to learn what money is should read. If you haven't already um, studied that before the book was released, because of course, some of us Bitcoiners, we've studied these things over the past couple of years, but still then Lynn's book is a great write up on that. And money has always changed, and with that change, usually follows positive change for humanity. Because think about what money is. Money is the very basis of our existence, not of our spiritual existence, but also in the Bible, it doesn't says that money is the root of all evil. It says that the greed for money is the root of all evil. So money, necessarily speaking, is not good or bad, but the question is, what is your relationship with money and what type of money do you use? And the money that we used over the past 50 years predominantly, which was fiat currency, which is a type of currency that we really use since 1971, already in 1913 with the establishment of the Fed, and then in 1914 when the Central Bank of England went off the gold standard. That's when the era of fiat money kind of came into existence. But since 1971, we really don't have any monetary standard. And you see that society is deteriorating because of that. Money being the very much a base of valuing each other. Think about it like that. Like when we talk about money, and the fact that we have a type of money that loses value, we accept that, I think pretty much shows how we also think about ourselves and how we think about others. Because I think it's actually almost like an insult if you pay somebody whose work you value with money that loses value. Like if you're not aware of that mechanism, of course it's not an insult, but once you start the mechanism of how fiat money works, once you understand that it's a type of money that loses value over time, it's pretty strange that we transact in that money and that we pay other people for goods and services, because money that loses value also means that we don't value each other and we don't value ourselves. And I think going into the philosophy of Bitcoin now and what self-responsibility and individual freedom means, individual freedom means that we accept self-responsibility and then we choose a money that does not lose value over time, but it increases in value potentially. And I think that creates a whole different basis, also as a collateral, of course, which you know very well, for human existence.
That is so well said. And I think it's the perfect counterpoint to my position, which is I see a world where both money and currency are going to kind of come together in order to get the good sides of credit versus just the fake fiat sides of credit. But man, that I'm sitting here and I'm like, I'm fumbling over my own words because I'm like, ah, it's such a good, you just put it so perfectly. Like that is the argument, like coming down to the personal, the human level of understanding, like leaving behind the economics and thinking about the other person, putting them first and treating them how you would want to be treated and, you know, paying them in Bitcoin because you know that that's going to accrue value over time. So the value of their labor that they've traded for you for that good or service is going to benefit them in the long run. Whereas today I go into the store, I pay these fiat dollars. Sometimes I feel bad. I mean, I literally are like, yeah, you're going to take these pieces of paper and then I get this real thing. Sign me up. You know, I'm happy to do that all day, every day, especially when I'm borrowing those currency debt derivatives against my pristine collateral asset. And over time with the compounding out growth rate, it reduces, it deleverages my debt. It reduces the burden of my debt. But am I doing that at the disadvantage of somebody else? It was so well said that it sparked that thought inside of me. But my next question is, do Do you think we're moving into a world like where it's a Bitcoin standard? Credit really doesn't make sense because of the compounding annual growth rate of Bitcoin. I mean, if you have 60% CAGR, and even if you cut that by a third to 20% CAGR, you don't need to lend your money to make interest. It'll just you'll save up and then you'll spend it. So it's an interesting dynamic. It's kind of two opposing philosophies. But do you see a world where we go into a Bitcoin standard and fiat completely disappears? Or do you think we're going to move into a world where we have both Bitcoin as pristine collateral and maybe like the base layer money, but also still have governments who are going to issue debt derivative fiat currency units? And then we have the ability to borrow those devaluing units against our accruing asset. Do you see that happening in the long, like, give me like medium and long run? Because in the medium run, I think it's clear that's happening. But in the long run, does that persist, or do we completely leave behind fiat and just move on to a Bitcoin standard?
That is a very good question, and I don't think so. I would agree with you. I see money and currency working alongside each other. So what do I mean by saying that? I think that going forward, over the next, let's say, 30 to 40 years, the dollar will persist. And the reason for that is also Bitcoin, because Bitcoin is actually not going to kill the dollar. Bitcoin is going to allow the dollar to exist for a little bit longer than we expected, because if the US government is going to build a Bitcoin position, those Bitcoin will increase in value much faster than the outstanding interest rate on the existing debt. So by owning Bitcoin, you can prolong the fiat system, plus through, let's call them crypto dollars, through cryptocurrency, which is USTD, the US dollar on crypto worlds, the world will most likely become dollarized, right? So I think that
Let me interrupt you right there, because I'm sorry to interrupt you, because I know you like to go, but and you get on these really good ones, and I'm mad at myself for interrupting you, but I want my listeners to rewind and re-listen to that. And then I want you to clip the video and send it to your local politicians so that they understand what's happening here. Because Bitcoin is not a risk on tech stock. When you add Bitcoin to your balance sheet, exactly what Leon describes happens, and it will actually strengthen the creditworthiness of the state and of the country. That needs to be understood. Leon, that is so well said. Thank you for making that point. Please go right back into your answer. And let me just add one more element to this, that perhaps the idea of, since I know you already agree with me, that a Bitcoin money and a fiat currency seem to be moving, it's not that far-fetched of an idea, because Bitcoin is really just replacing real estate. Real estate has already fulfilled that role, hasn't it?
Yes, that's very well said. And thank you also for saying that. And that's very well put, because I'll go on to explain how I think that currency and money will coexist with each other. And I also talk about eCash, because I think next to government currency, there will be privately issued money like eCash on Bitcoin, for example. But what is important to understand is, because we talk about, Bitcoin as this pristine form of collateral, and using money as collateral seems a bit far-fetched when we think about fiat currency, because fiat currency serves as horrible collateral because it loses value over time, and you want to have a collateral that increases in market price over time, so the debt ratio decreases, of course. And real estate is used as collateral within the scope of the fiat system, because the dynamic in the fiat system is as follows. Money loses value. If you own a scarce asset like real estate, it will go up in nominal value, and you can use it to hedge against your debt, and you can use the cash flow to pay back the debt. But real estate is not meant to be used in that way. It actually has a utility value. And of course, land is scarce, and there is scarcity in land, and it always has been used as a store of value. But real estate, like the physical properties that are on land, that have not been used as a store of value pre the fiat era. And it's important to understand, because I looked into this going back into Rome. I looked into kingdoms in India, in Japan, the shogun system in Japan, for example. Like, people owned land, right? But the wealth of these individuals was based on the agricultural capacity of that land, not on the physical buildings that stood on that land. So the use of a tangible physical building as a store of value only came into existence because our money doesn't serve as a good store of value. And now we come to the collateral function. So money, good money, like gold, used to be used as collateral, and now money is a bad store of value, so real estate comes in. And real estate is really the backbone as collateral of the global financial system. That's a problem because it's not a good form of collateral. And I think that Bitcoin works much better as a form of collateral, and that's why I like the dual collateralization of Bitcoin and real estate, and that Bitcoin slowly fulfills the role that real estate did, which is really a role of money being this pristine form of collateral. And then alongside of that, we'll most likely will have different currency systems, both public and nation state, um, and private. And the US dollar is the most obvious cryptocurrency, as Tether, that exists at the moment. But I do believe that what's being built with eCash on Bitcoin, and also its interplay with Nostra, that's going to become pretty interesting, I think, also in the future.
Yeah, yeah, and I love that explanation because people don't realize how important real estate, even vehicles and other forms of collateral within the system that securitize some of the debt that gets spent into the economy. And it's an amazing thing. But one thing I want to dig a little bit deeper on is you said real estate is going to go back to its utility value. And could you describe a little bit of the economic process, maybe for some of my listeners out there who are looking at real estate right now? They're starting a family. They're looking to move up out of the renting the townhouse into buying their single family home, and they know what's happening. They have some Bitcoin, they have some gold and silver in case there's the internet goes out or something, and they're prepared for these types of scenarios, but they're looking to get ahead. They're looking to find a place to raise their family. They're looking at the real estate single family home. I believe in the United States, the average cost is $400,000, right around that price point. How would you define utility value? And do you have any tips or ways of thinking about it for my listeners to kind of understand, hey, when I'm looking at a property, I know I'm trending towards utility value. So how much of a premium am I paying?
Yeah, I think it comes down to a personal, subjective definition of what the utility of that property is for you. Because think about, the utility is up to the individual. For example, you want to build a family and you want to have a home for that family. So the utility of the home is having a place for you to raise a family. That's a huge utility, and it's worth giving up some of the capital that you own, right? But once you understand the dynamic between Bitcoin and real estate, it becomes a bit of a bad decision to sell Bitcoin to buy real estate. That is because, and that's something that I've also listened to some of your podcasts, that you personally know, is that because Bitcoin is scarcer than real estate, it increases in purchasing power by a multiple faster than real estate. And it becomes obvious when we look at the price of the average home in the US. I looked at it actually yesterday, so there are different estimations, but what I found, the data point that I found, is $513,000 for the average home in the US, which is slightly more even. And if you price that in Bitcoin, though, right, 10 years ago, it would have cost you in dollars, it would have been less than today. It would have been around $300,000, but that would have been around 40, 50,000 Bitcoin, I don't know. And today it's around 4 or 5 Bitcoin. So this dynamic really shows that if you own Bitcoin, you don't want to sell it because it's increasing in purchasing power faster than real estate, because Bitcoin is much scarcer. So real estate as a store of value has lost its purpose since Bitcoin was introduced to the world, similar to how you wouldn't use a horse to travel from, I don't know, New York to Jersey. You'd use a car, right? And you would fly from the US to Europe. You wouldn't take a boat. So in the future, once this mindset settles in, what I expect is that, I'm talking like 50 to 100 years out into the future, people won't use real estate by default to store value. They will use Bitcoin by default to store value. And the mindset of houses always go up in value, it's a great investment, might change to houses are a potential liability and Bitcoin always goes up in value. Once you understand that dynamic, you can define for yourself what's the utility in real estate for myself. And then you make a decision and potentially use products like yours that allow you to use Bitcoin and its increase in purchasing power to acquire real estate.
So well said, and thank you for describing that for my listeners because, yeah, as you said, and they know, I learned that lesson the hard way, and I don't want anybody else to learn that lesson the hard way, and that led to the creation of our product. Like every product that we've built has been a problem that I've personally run into. So present at me as a long-term Bitcoiner, it presents solutions to me, and I believe, as a Bitcoin maxi, if this is a solution for me, then it's going to be a solution for the other people who are in my position as well. But I'd love to hear your ideas on the combination of, because there's so many different ways to do it. I'm pretty sure battery finance needs to be cutting you a commission check because that's very clear where that idea came from. So that's the first time I heard it was from you, and they just turned it into a product. But I want to hear your opinions on how you combine Bitcoin with real estate, both in a commercial and residential fashion, and how fast you think that this idea can accelerate once these models are proven true.
Yeah, by the way, I have to say I met Andrew also a long time ago. So he's been on this for a long time as well. I just want to put it out there. So because he comes from the debt market, Andrew Hohns, he's the CEO of Battery Finance. He comes out from the debt market. And I think he also understood the dynamic between real estate and Bitcoin as debt very well. And what I would suggest, so this is something that I'm working on right now, because it's one thing to say, I own real estate and I want to refinance that property and I want to take the equity gap between the outstanding debt and the value of that property and refinance it to buy Bitcoin. I think that's a logical and good step. But I'd like to go a step before now talk about the mindset of a real estate developer, because I come from a real estate development background. I'm still active in real estate development, even though I'm not on site. I'll take more care now of financing models. And what I would like to do is for all of our new developments, let's say we need $10 million for a development. I would like to receive 11 million. And with the additional $1 million, I'd like to buy Bitcoin, keep it in the same entity that owns and constructs the real estate project. Once the real estate project is finished, let's say after 5 years, Bitcoin will have gone through a halving cycle, will have increased in purchasing power, and that creates this capital base in the company that you can use to lend against and potentially then fund maintenance work. And it's similar to, I think, what you guys are offering. You use the dynamic between fiat being inflationary and losing value, Bitcoin being disinflationary and increasing in purchasing power, and you can use that to lend against Bitcoin to maintain the property, do new property investments, and so forth. So ideally, if you would ask me, I would not like to start a new real estate development without allocating additional capital towards Bitcoin and then incorporating Bitcoin directly into real estate development financing.
Yeah. Wow. I mean, it's just once the light bulb goes off, I don't think people are going to stop thinking about it because, like you said, you're building a capital base. So when you have real estate and you can establish cash flows, what property managers understand and regular people don't understand is that there's a lot of costs to property management. There's significant cost. I mean, it's more than people under the maintenance, the working, the work orders, all this stuff adds up. Disagreements between community members, all this
Yeah.
stuff adds up and takes time and energy, which draws away from that cash flow base, which of course makes the investment less and less interesting. But when you have a capital base layer of money on your balance sheet like Bitcoin at the same time, so you just borrow. Now, where did you come to 10%? Because you said 10 million to 1 million. Is 10% a magic number in your working model? Did you use that just for an easy example?
Yeah, I just use it for an easy example.
Okay. Yeah. So, and the other thing about this, and I want to get your take on this because what I've found is communicating with our clients is that the hard part about taking that $1 million. So you're going to build a $10 million facility or community, and you're going to borrow the extra million, put it directly into Bitcoin, hold on your balance sheet, becomes the capital base, and it expands at 60% CAGR, which is fantastic and would absolutely work. So
Mhm.
that's That's a solution. However, for a lot of small to medium-sized businesses and maybe some smaller developers or those who do construction loans, stuff like that, putting Bitcoin directly on the balance sheet introduces the volatility of Bitcoin, which
Mhm.
over the long period of time doesn't matter because it doesn't. It's 60% CAGR. So you buy it and you hold it and you let time do its thing over time, and you're good to go. But what happens if that developer runs into a problem and they need to access and borrow against that Bitcoin? I want to get your thoughts on our Bitcoin bond product. That's where I'm going with this because we
Mhm.
designed it specifically for developers and for small and medium-sized businesses who want Bitcoin exposure on their balance sheet,
Mhm.
but aren't really in a position to hold that equity value for 4 years without touching it. And sometimes they might need to get access to it, which they know at People's Reserve, they can bring that Bitcoin bond back, post it as collateral. We treat it as pristine collateral, let them borrow against it, unlock that equity on their balance sheet because, they ran into a licensing problem or some type of rule that got overlooked, or maybe just a piece of equipment broke down and needs to get fixed or refinanced. Who knows? Do you see that playing a role as well, or do you think it's Bitcoin only, and we're not going to see Bitcoin into fusion of not just real estate but other types of credit and debt products?
Yeah, I'd like to hear your opinion on that as well, because I know you thought about this a lot, but I think it's a mix between what you basically said and probably my type of thinking, because I haven't, from now on, I haven't thought about the perspective of someone offering that product other than from the perspective of default. So I'll quickly talk about the perspective of the lender, then I'll talk about the borrower perspective, because from the perspective of a lender, I think that if you extend a loan to somebody that's going to develop real estate, if you allow them some more money to buy Bitcoin and you hold the private keys in a multi signature wallet, if that person is going to default on the loan, you'll still have the Bitcoin. So that's actually a hedge against borrower default. So that is one thing that I personally always think about. And then from a borrower perspective, I think the volatility of Bitcoin is it's kind of secondary, because you can take the cash flow from the real estate to pay back the debt, of course, right? So I think that especially at the intersection of Bitcoin and real estate, like Bitcoin's volatility is kind of secondary, because with the way that I thought, I mean, you had just introduced a new thought to me, but the way that I thought until now was I'm not going to touch the Bitcoin anyway. And I always think in these 5 to 10 year cycles. Why do I think in 5 year cycles? On average, a development takes 5 years. So for these 5 years, I'll always try to find a deal where we have favorable financing options for that period of time. We wouldn't need to sell the Bitcoin anyway. And if you just ask me uh, the example I gave of a $10 million development project, you asked me why do you want to add $1 million of Bitcoin? So I'm going to explain my reasoning. Let's say the project is 10 million. I need additional capital to buy Bitcoin, because obviously the project is not going to magically become cheaper by me introducing Bitcoin. So I need additional capital. Why I said 1 million, that's around 10%. And I believe if you take more than that, let's say 30, 40%, 3, 4 million, you'll obviously have a ratio between the development project and buying Bitcoin, where the bank is going to be like, well, you just want us to finance your Bitcoin purchase. Why would we do that, right? We want to fund your real estate development project, and just giving that additional 10% from my perspective is enough to benefit as a developer, but it's not that much that the bank starts to ask, are you going to become a Bitcoin purchasing company now? Are you a real estate development company now? So I'm trying to find a sweet spot where the bank is actually willing to provide that additional sum. And I'm right now also talking with banks, and 10% seems to be the sweet spot they can live with, where they still see us as a real estate development company, and they see the additional purchasing of Bitcoin as beneficial to our company without thinking, well, you guys just want to buy Bitcoin.
Yeah, that's a great point because um, at People's Reserve, we we prefer the Bitcoin. So you can buy as much as you can because, like you said, from the lending side of things, you are eliminating our risk. You are completely. I mean, you're not eliminating the risk, but it's an over collateralized risk versus just oh, hey, I'm a developer. I've developed these properties. I've been successful. I want to develop a new property. Give me 10 million. Okay. Well, that's a different risk factor. It's a completely different risk portfolio than someone who comes up like you and says, hey, I've done the same properties. I need this property, but I want 11 million because I'm going to hold 1 million in Bitcoin. And by the way, I can post that as collateral and part of the contract. It really gets the lender to start to, well, it gets smart lenders to say, oh, okay, interesting. And one thing that we found in our beta, talking with different potential customers and borrowers and lenders, is that uh, on the residential level, this is actually really popular, or I think it's going to be really popular, and it's a way to do what you're saying, but if you've already made that choice. So for people who already have a mortgage and have been paying into it for 4 or 5, even more amount of years, whatever amount of years you've been paying into it, hopefully you got a 30 rate fixed mortgage at a really low rate and you're sitting pretty, but not everybody does. And by the way, since that time, the home values have gone up. So on a historic arc, home values might be potentially at their peak over this next decade or so in real terms.
Mm-hmm.
So what we want to offer is what we call a home equity Bitcoin line of credit, because it's acknowledging that, say, are you going to be a Bitcoin purchasing company? No, but I want to transform my home equity into Bitcoin equity. I understand, I bought my single family home for 300. I can now sell it for 500, but I need somewhere to live, so I can't sell it. And I have trapped home equity, and I don't want to borrow against that home equity and pay the bank 8% or more, maybe 6%, depends on who your banking partner is. But then you have to buy the Bitcoin, and you can't post it as collateral. There's all these different things. So with what we call the He block, we allow you to transform your home equity into Bitcoin equity. So you can pull out that equity difference, like you had mentioned in your first example that you had said, and it puts it into Bitcoin, but it puts it into multi-sig and posts it as collateral, which reduces risk, which lowers your interest rate. So at the same time, the lender is saying, hey, we feel comfortable because the Bitcoin we did enable you to buy is collateral within the contract. And then the borrower feels happy and excited because they're like, well, hey, look, I transformed my home equity, which is going to go down to utility value, into Bitcoin equity, which is going to expand at a much greater rate by its engineered design. So this was the right move to make, even though I had already made my purchase decision. How do you feel about that product and the potential for that to help people kind of transform equity?
Oh, it's great. It's really great. Also, I listened to your podcast with Natalie Brunel, and you also laid out your way of thinking there, and I really liked it.
Thank
Um,
you.
yeah, because I'm thinking about this a lot, and it's really refreshing to see somebody that's thinking about it as well. But you have a different angle because you have your personal experience as well, and you have this real estate take that I also find very intriguing and interesting because real estate is very important. I mean, let's take the store of value function away. Being able to have a place to live, to work, to raise a family, to be creative, like whatever. Um, it creates so much stress to not have a home, right? And I live in Berlin. In Berlin, if we compare Berlin internationally to other metropolitan cities, if we take New York, London, Tokyo, rents were considerably cheap because until 1989, the Berlin Wall divided Berlin in East and West Berlin. And West Berlin, which was part of the Soviet Union. Obviously, nobody wanted to live here, right? Nobody, or very few people actively said, hey guys, sign me up for the socialist dictatorship. So what happened is once the wall came down, all these properties that were in prime locations, they were very, very cheap. So
Mm.
you could get a property or you could get an apartment, like a one-bedroom apartment, for 500 euros, which is around same amount of dollars 10 years ago in Berlin. Now, because of COVID, the inflation, and because of the war in Ukraine, energy prices going crazy. Now the same apartment costs around 800, 900, or 1,000 euro. So what you really see here is that the cost of living goes up, and with the cost of living goes up, stress goes up as well. And people develop this high time preference because we talk about time preference a lot and in the Bitcoin space, and time preference and money are also linked because if money loses value, you want to spend that money and you start to create this very short time preference. and you also create a short time thinking, and you cannot think, decades into the future, or about building a family, building a legacy, or maybe even building a multi-generational company. But with Bitcoin, also for myself, and I think it's the same for you, from judging from what you said, you completely switch the way you think about the future. You think, okay, in the future I'll have more, and that's why I'm more happy with what I have now and more content.
Mm.
And because in the future Bitcoin will provide for you. It can even buy your home. Like, you can have a self-paying Bitcoin mortgage that allows you to own your own land and your own house, not because it's such a great investment, but because it's a great place to be, and it creates this feeling inside of you. Just feel comfortable.
Mm. This is one of the things I love about your content, and you guys aren't going to find this anywhere else on X or in any newsletter. So again, make sure you're following Leon, because he brings it back to humanity. He brings it back to the philosophy behind the economics. And I have a lack of doing that in my content. I don't point to these important things, but yeah, this is where that saying comes from. Bitcoin changes you. You don't change Bitcoin. And yeah, we're on the same page. Just saving in Bitcoin makes sense again, right? You can't save fiat. It doesn't make sense, but it changes the way you behave. It changes the way the market makes decisions, and it changes it in a way that makes things worse off, not better off. So it's just, I love how you tie those things together. And I got to say, there's a lot of synergy between us, and perhaps you should be making your way over to People's Reserve and helping us think about these things as well.
I'm happy to discuss. Unfortunately, or not unfortunately, which is actually a good thing, I'm so busy. So our company, OneVest, we are a real estate development company, like you said. But I'm very happy to explore these synergies. So, because I'm actively trying to implement these within our business structure, and I'm happy to continue the conversation and learn if there's potential. Of course, we sit in Germany, so I don't know if you guys offer products to the German market, but please know there's a company here, a real estate development company, that is open to working with you.
Very good. Happy to hear that. Yes, well, we were USA only at first, but we are working on getting international. That's something that we do want to get out to do. But I'm so happy to hear that you're having success over there. And maybe we can even explore an advising position or role as we roll out our products from residential to commercial and beyond, and even internationally in your country of Germany. So just amazing way to think about things, and an amazing 35 minutes where we talked about Bitcoin as pristine collateral, money, credit. I want to move now into the bigger, greater macro picture. And I want to get your take on what exactly is happening with the United States of America. I know you're over in Germany, but I want to get your perspective on it, because as a United States citizen, I'm in the fish tank, so to say. So it's nice to get opinions that are outside of that fish tank. What do you think is going on with the current administration and Donald Trump with tariffs, with Elon Musk actually coming out and saying, hey, property taxes don't make sense. Property taxes create a lease to the government. So even if you buy your home, if you don't pay your taxes, they're going to come and take you out of it. It's not your home. You don't own it. It's not property. Is this legal? Is this constitutional? Maybe we should get rid of property taxes, which sounds great. And like at first I'm like, yeah, you should, because then I can actually own my home. But then it's like, well, we're going to have to print money to pay for other things. So there's that trade-off. And I want to get your thoughts on, what are the trade-offs if they get rid of real estate taxes? What are the trade-offs on these tariffs? And how do you think it's going to affect the United States and partners of the United States? And then ultimately, does that create inflationary or disinflationary or deflationary price pressures?
Yeah. So to answer your question, I'll share my personal Trump journey, because when I first heard about him, he really triggered me, and I didn't like him at all. And that was almost 10 years ago, of course. And that was also due to the fact that here in Europe, the mainstream media, and that's the same all over the world, they show like snippets of what he says, of course, right? So 10 years ago, when I learned about him, I was not even 20, more than 10 years ago. And I really disliked him. And over time, though, I started to understand that it's not if I like him personally or if I do not. It's maybe about him having the right people around him. And I'm a libertarian. I really come from anarcho-capitalism, and I do dislike centralization in the state. So you just asked me about Elon, and Elon saying that property taxes should be raised, and I agree with it. Most of the taxes should be erased. I mean, if we would agree on something like a 10% tax, talking about the Old Testament and also the New Testament, they suggest giving around 10% of your income to the community, and I think that's like a number that communities could agree on. But then the question is, how is that money managed, right? Because if you give money for people to manage that money and it's just being used for fraud and manipulation, we end up in the system we are in right now. And Elon, for example, is somebody that also triggers the hell out of people because he says things that he just believes in without contemplating how people hear what he says, right? And we live in a time where it's not about what you say, it's about how you say it and how you look. And it really triggers people that I think that Elon just says whatever he thinks, and sometimes he has a stutter. But what do you expect? People that are very, very intelligent, they are weird. And geniuses, like throughout time, they have always been, yelled at by the mainstream. I'm not calling Trump a genius here. I'm talking Elon. I'm calling Elon a genius. And because most people don't understand the way that they think, because they think differently than most people, and that's why they're so important for humanity, because they achieve great things. To be great, you have to be different. And I now started to accept these individuals that you discussed, and I understood that even though it's not what I want eventually to be the norm, I believe it's important right now for some of these changes to come into existence. And we need to understand that AI, cryptocurrency, and with cryptocurrency I'm talking about Bitcoin, I'm talking about cryptography, right? Because essentially that's what the cyberpunks understood. They understood that cryptography allows the individual to protect himself or herself against the state, because no matter how much funds the state is able to bring up, you won't be able to break cryptography, right? If it has a certain level. And that's why Bitcoin obviously cannot be broken. So I think what is happening right now, it's just very interesting, because I don't really judge it. I don't really say, oh, it's good or it's bad. Obviously, everything that's happening is good for Bitcoin, because the game theory that's going to play out, like, people now understood Bitcoin means winning. If you want to stay competitive, you need to own Bitcoin, because it's the best monetary technology. And it's not a question, do you like Trump, do you like Elon, da 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 da. It doesn't fucking matter. What matters is that there's a new technology, and if you don't adjust to it, you lose.
Yeah, absolutely. And that's what I've been thinking on over these past couple of weeks. As the I always said World War III is economic, and it's it's fought in the trenches of finance and marketplaces and trade, and to see like these big changes coming up, it's exciting, but at the same time, and I think some of the changes actually do need to be made, but at the same time, it gets you a little bit concerned, because that the foundations of finance are going to be rattled, and I think that uncertainty within how this transition is going to take place, especially when it comes to U.S. Treasuries, because it's the income tax that backs the vast majority of the cash flow that establishes that credit worthiness that we were talking about, especially without Bitcoin in the picture. So with no Bitcoin in the picture, 3 trillion or 3.6 trillion of income tax potentially gone, and then having to make up that tax through tariffs, it makes you start to think, whoa, do I want to lend my money to the government? Because
Yeah.
they're already soft defaulting by printing to make up for the deficit, right? The deficit is a soft default. You're creating currencies units out of thin air, and you're inflating the currency, which dilutes the supply and decreases the purchasing power. That's a soft default. But what's
Yeah.
interesting with Trump is that he wrote a book called The Art of the Comeback. Well, The Art of the Comeback was about his comeback from the real estate crashes that took place in the United States during the major part of his career, where at one point in time he was upwards of $3.4 billion in debt. And these are dollars like in the late 80s. So there's a lot more purchasing power behind 3.4 billion back then. And he's 3.4 billion in debt. He declares bankruptcy. He negotiates his debt with the bankers. Um, and now, he comes out of all of that net positive. And he wrote that book, The Art of the Comeback. But it got me thinking, hey, would Trump try to restructure United States debt? Like, he already has experience in restructuring his own personal debt, literally going to the bank and saying, hey, look, I can't pay it. So maybe would you like to take a percent ownership in the Plaza Hotel? And they say, yeah, okay, great. We'll take that ownership. We'll reduce the burden on your interest rate and we'll get this fixed. So Trump is a negotiator and he's already coming out income taxes, potentially with Elon, property taxes, going to switch from over to the tariff model, which I think is a really good model and set the United States up for a lot of success when it was first implemented. And I think we can make that transition. But again, my concern is the transition of these changes. And my question is, with these changes potentially around the corner, do you think there's a chance that Trump would actually hard default and restructure U.S. debt? And then on top of that, if he does do that, what do you think that would look like? And I know this is complete speculation, so guys, don't hold Leon to this. I'm throwing him a tough question, but I appreciate his opinion, so I want to see how he's thinking about it. And then on top of that, getting back to, is this inflationary, disinflationary, or deflationary?
Yeah. Sorry, I didn't answer your question in full. You also asked me about tariffs and inflation and deflation. I mean, I don't really know. It's really speculative. I don't think, because in a 4-year term now to already go on a hard default on the existing debt, I think it's a bit too early. I think there's a few more decades until there's financial collapse, if they're able to cut spending, because spending is completely out of control. Cutting spending obviously allows also for money to be available for paying interest rate, right? But none of these scenarios are like my ideal scenario. I would like to have a full reserved, 100 reserved, Bitcoin reserved currency. Of course, that would be my ideal currency. But it's going into the right direction. Let's put it that way. I think for some people outside of the Bitcoin space, this is just totally strange and scary. They're like, what the hell is going on? But if you do understand Bitcoin, you do understand that the implementation of Bitcoin into any type of structure, rather it's a company or if it's the individual, is good. So the implementation of Bitcoin within the structure, the financial structure of the United States, is good for the people that live in the United States. But at the end of the day, it all comes down to the individuals, because the government is an entity that works in its best interest. But the interest of the government is not necessarily the interest of the individual. And so whatever is going to happen, it's very hard to say, because I change my opinion on that also every day almost. But what I do think is important is that change comes from the individual. So now seeing that game theory plays out, and if nation states adopt Bitcoin and they understand its ability to work as collateral, that's great, that's interesting, that's good for Bitcoin. But at the end of the day, like, the government doesn't work in our best interest.
Yeah, so well said. Everybody needs to remember, here in the United States, we have this expression, we the people. It's actually our slogan at People's Reserve. We want to serve we the people. And the government balance sheet is not the government's, it's we the people. And that's why I think, I want to reiterate it here. Every country should not just have a strategic Bitcoin reserve. A strategic Bitcoin reserve is step one. The next question is, how do we leverage our savings, right? The economic benefit, our economic surplus through our production. How do we convert that savings in a way that benefits our people, right? That's the whole point of it. What's the whole point if you build up this whole huge balance sheet of any government and then it's never utilized to benefit the citizens of that country? So we need to have the Bitcoin recapitalization fund. And the Bitcoin recapitalization fund is not the strategic Bitcoin reserve. The strategic Bitcoin reserve comes with handcuffs. You buy Bitcoin, you can't sell it for 20 years. If you sell it, you can only sell 10% of it. You got to take the proceeds of that sale and use it to pay down the debt. That's really important here in the United States, where every 4 years we could get a radical change of thought. So we need those handcuffs. But beyond that, we need the Bitcoin recapitalization fund so that we can start integrating with different credit and debt products from the government in order to benefit the people. So people want to know, why are the police suffering? Well, because they ran a defund the police program. So we need to refund the police. We need to recapitalize the police. How about firefighters and EMTs? They're in the same situation. How about teachers? You want your teachers to teach your kids? Well, then don't pay them like babysitters. Pay them like you want them to teach your kids. How do we do this? With the Bitcoin recapitalization fund, where you create hybrid debt equity products that you put into the funds and then allow the pension funds of the firefighters, police, EMTs, and teachers to buy, so that when they understand, as the value goes up on that balance sheet, it benefits them, not just the country, who is, like you said, never going to be looking out for the best of everybody. So we need to develop these vehicles that are designed to force the government to look out for everybody else. Because if we don't do that, then none of these benefits that we talked about here on this show are ever going to come to be. It's just going to be a number on the screen that helps increase the credit worthiness of the government, but does nothing for the individual. So thank you for bringing me that back to that point. But and I know that you agree with that point. But as we integrate into the system, do you think that there's going to be problems with the fractional reserve banking practices, especially fractional reserves and rehypothecation, when we try to integrate Bitcoin? I know we both agree we're going to this future, but we're coming into this like, hey, I can. You want to borrow money? No problem. Type in a, but over here at Bitcoin, you want to borrow money, you have to think really hard about lending that person borrow money, and especially if it's issued in Bitcoin terms, and you can't issue any more of it. So, what possible issues do you see with fractional reserve banking and rehypothecation as it comes to Bitcoin's integration into the system?
Yeah, I think what's interesting, first of all, is Bitcoin works as a new type of standard, not just as a monetary standard, also as a standard of like an ethical standard, because it's ethical money in its essence, because it's not inflationary. Inflation is theft. Tax, arguably, to some extent, is theft as well, right? Depending if you do it consciously because you agree with it, but if you don't agree with it, it can also be considered theft. But inflation, for sure, is theft, right? Because it steals from everybody that saves, and everybody that saves has a rational type of thinking. I save, I want to build for the future, but you're being penalized for rational thinking. And Bitcoin is a new type of standard, and it benefits everybody with a rational type of thinking. And that's why irrational models like fractional reserve banking, where you give out money that has no value, I think these types of practices, they are going to accelerate over the next couple of decades. And since COVID, they are already accelerating because the system is dying. The system needs to fund itself. But through Bitcoin, people understand the negative effects of fractional reserve banking, for example. And I think as Bitcoiners, or as we the people, we can demand, we want proof of funds. Like, that's something that we can demand. If you run an institution that gives out loans backed by Bitcoin, and if I want to know if you actually own the Bitcoin, I can ask you, I can demand it. And the customers can demand it. So being a Bitcoiner also gives us this vote of saying, hey, I want to know this and I want to know that. Because right now, the way that the system works, we don't have that vote, because we have nothing that the system wants from us except our wealth, which they obviously steal. But with Bitcoin, because the wealth cannot be stolen, I actually have something to say, because if somebody wants my Bitcoin, they need to offer a product or service that I agree with. Whereas right now, we are forced to use products and services. And if these products and services get worse and worse over time, we'll just have to deal with it. But by owning Bitcoin, actually, I become this independent individual that only needs to use a service if I want to. And I think we can demand different practices in lending because of that.
Yeah, that's so well said. I know one thing that we're looking at People's Reserve is the concept of financial sharing, which is similar to health share. So here in the United States, we have really big insurance and healthcare issues, and certain groups of people, specifically Christian ministries, have created nonprofit health share communities where they basically, these people, they don't believe in experimental medications. They don't believe in some of the other practices that the insurance companies pay for, such as sex changes and um, abortions for any reason and stuff like that. So they want to separate their costs from the cost of this experimental medicine and medicine that they don't believe in, that goes against their faith. So they've been able to create Christian health share ministries, which allow that ministry to no longer be ruled by the Affordable Care Act, which is what governs health insurance here in the United States. And I say all that to say this: we're exploring the opportunity for financial sharing status. So this has never been done before in the United States. It would set a precedent, but there is good precedent with Sharia law. There's good precedent set through Christian health share, where people can get together and sign a statement of faith that says, look, we don't believe in fractional reserve banking because it's theft, like you said. Like, yeah, we'll go to the store and pay the tax because we believe that that tax goes to the government and that it's utilized to our best, to make our lives better. Even though that might not be the case, we believe that, so therefore it's not theft. But when they just inflate the currency and steal from you without your knowledge and understanding, that is theft. So fractional reserve banking goes against our beliefs, which is thou shalt not steal. And then when you rehypothecate and you take something that I've put on deposit at the institution and you let somebody else make a claim against that deposit, that isn't just my claim. And now there's multiple claims against those assets that are held on your balance sheet. That too is theft, because behind somebody's back, you're pledging what's truly theirs on behalf of yourself in order to generate a profit in your business model. So our position is, hey, let's explore the opportunity and potential to create a FinShare entity that isn't governed by fractional reserves and Dodd-Frank and a lot of these other banking practices that were specifically created for fractional reserve banks. Like, if you have a non-fractional reserve bank, you don't need FDIC insurance, because if everybody came back to get their money all at once, it's there for you. You can get it, no problem. It's fully reserved 1-to-1. There is no multiple claims. There is no fractional, where are we going to get all this money from? Bank run, FDIC, we got to print it. You don't have those same problems. You don't need those same rules and protections. So I think it's really interesting that we're seeing this thought process move forward in the courts. Like, we want to push this forward in the courts so that we can start to really move the world forward. And most people who buy Bitcoin, I think they don't understand that. They buy it, they hold it, they live their life, they raise their family. There's enough going on. But there are people out here who, like Leon and myself, are moving towards pushing up and setting up these systems in a legal way so that we have laws that are protecting the way that we want to do our health share and the way we want to do our financial share, so that we can practice things according to what we believe is right and true. Because ultimately, as Leon has done such a good job throughout this interview, he has laid down not just the economics, but the morality behind the economics and how it affects the individual human being and what that means, how a human thinks about themselves and another person, how that affects all of our quality of life and standard of living. Leon, it was such an amazing conversation. I'm so happy that you were able to join me. And I hope we're able to do it again, because I had a few light bulbs go off during this conversation, and I very much enjoyed it.
Me too. Thank you very much. I'd be happy to, because I'm writing a book right now on the topic of Bitcoin and real estate. So I'll be happy to discuss that once it's out in September,
absolutely.
the latest.
We'll have to get something scheduled for sure. Do you have a title yet?
Digital Real Estate. That's the title.
Digital Real Estate. Beautiful. And I'll give you the last line to the audience. Guys, remember, please go and follow on X. If you're not following, you are missing out. It's just that simple. But tell everybody where they can follow you. Tell us a little bit, just remind everybody where they can find your content, if there's anywhere else besides X, and then something about the timeline for the book release so everybody can get excited.
Sure. So you can find me on Nostra at Leon Vankum, and I share my writing process on my book, Digital Real Estate, which is set to be released in September, on leon.vankum.com. leon.vancom.substack.com. So that's my newsletter. And next month, so February, which is let me see, we're already in February. I'm writing on how real estate owners, so people that own large real estate portfolios, how they can follow basically MetaPlanet and MicroStrategy. So that's the topic for next month.
Beautiful. Thank you again so much, Leon. And I look forward to catching up with you soon, right before that book comes out. Good luck. I hope everything goes well for you. I know I heard Larry Lepard writing his book was a big hassle. So I hope it goes easy for you. And thank you so much. And I'll see you again soon.
Thank you. I really enjoyed it, CJ. Thank you.